And now I'd like to introduce another event co-host, Mr. Kerry Smith, Vice President and Senior Mining Analyst with Haywood Securities, who will conduct a fireside chat with Radisson Mining CFO, Hubert Parent-Bouchard. Gentlemen, where's your teammate? Oh, we don't know where he is.
We do not, but I can...
Okay, well, why don't you and I sit and we'll have a chat? How about that? And we can talk a little bit about, well, I'm not like that, but how about you?
So why don't I just, well, I'll just start. I have, I just have a quick little disclosure that I have to give, that I'm a senior analyst with Haywood, and we're an independent brokerage firm in Canada, a member of the Canadian Investor Protection Fund. And there's some cautionary language that about, you need to seek advice of a registered rep if you want to act on anything that I say. So it's something that I'm required to do. So having said that, I'm not sure where Hubert is. So the company that's supposed to be presenting is Radisson. Radisson has the O'Brien mine, which is actually, I think it's probably the highest grade gold mine that was ever in operation in Quebec. It produced just slightly over 500,000 ounces at around 15 grams. And I'm not sure if we're going to find Hubert or not, so I guess we're just going to have to wait.
He's gone AWOL on us, I think, this morning.
So perhaps we'll just wait. I'm not sure if there's any general questions that people want to ask about the sector. I mean, it's for junior companies generally, it's been a pretty tough trade the last couple of years, as everybody knows, and really it's kind of gold price dependent. So we're somewhat at the whim of the Fed, as it seems.
We're not seeing him. Has he arrived? No. Okay.
No. So what do you want to do then, Joanne?
Well, if we have any questions, like maybe you can talk a little bit, Kerry, about what you're seeing in the sector right now, what's been happening, certainly from Haywood's opinion.
Sure.
And
sure.
just handle a
sure.
bit of a
So,
riff on
yeah,
everything.
Sure. So, we, our sort of bread and butter is the small cap, mid cap sector, the mining sector. We do a lot of oil and gas as well, and my view of the markets is the generalists are not there, and if the generalists are there, I think they're playing it from the ETF side. So it's less risky, it's easier for them to trade in and out, and so we don't really see, outside of the dedicated resource funds, I don't really see a lot of participation by the generalist investor out there, the generalist client. I mean, we have a pretty big retail network. They've got collectively about 15 billion under management. So our retail guys are doing a lot in the sector, and but that's really financing, early stage companies, which has kind of been our bread and butter for a long time. So I think until you get those generalists back in the market, it's going to be tough. I think the catalyst, there's probably a few catalysts. The obvious one is the gold price, and I think it tried to break out through 2000, not that long ago, failed, went back to 1800 really, and now we're kind of range bound, we're bouncing around here. And until I think we get up a little bit higher, I think it is going to be a little bit trickier. And obviously the market's really focused on results, and some companies have delivered some pretty spectacular results. Filo is a good example. It's a company that we cover, and they've had this big discovery down in South America, and that's been a real win. But it is difficult, and I know everybody's working hard to try and raise money and deliver results, and hopefully we'll get a more accommodative market here. I think the other aspect is, the overall market is rolling over, and a lot of people, I think, have never been in a real bear market. I mean, we've had a pretty strong equity market for the last 10 years, with the exception of the COVID crash, but that only happened for a month or so, and then everything came screaming back. So there's a lot of people that are in the market, just generally invested in the market, not particularly in the mining sector, who have made a lot of money, and they're kind of thinking we've seen the pullback. But if it gets a bit uglier out there, then I think you would see more rotation into some of these defensive positions like gold. So, and I've said many times, I think the ultimate play against an inflationary environment is gold, obviously. But I think the royalty companies are really the ultimate play because they don't have any cost exposure, so there's no inflationary pressures on them, and they've got exposure to the gold price. So really, if you were trying to dip your toe in the water, I think that would be a good place to start with some of the royalty companies, and then as you as you see the market roll out and develop, then you start looking at the producers, which have more leverage, obviously, but have more risk as well, because we are seeing some cost inflation out there, certainly on the oil side and the consumable side, and then on the pipeline, just the supply chain logistics. So that's kind of where we're positioned. I like to meet everybody I can. I like to see what people are doing. A lot of guys are doing good stuff out there, and it's a shame that the market doesn't really recognize what people are doing, but it takes time, and I think you just got to conserve your balance sheet until we get a market where people are prepared to pay up and recognize the things that you've done and the results that you've delivered. In some cases, people are putting up pretty good resource numbers, pretty good drilling numbers, but nobody seems to care, and that's just symptomatic of the market.
Okay, and Kerry, I have one more question. What are your thoughts on the next rising commodities, the gold price? Like, where do you think we're headed, particularly with the inflation, the economy? I know it's kind of a question that everybody has an opinion on, but you're particularly well positioned to say, to comment on that, because as an analyst, I mean, you're looking at all the statistics and data.
So, I think gold, the simple answer is I think it goes higher. I think that's kind of a bit of a chicken shit answer, to be honest. But, I think that there's a number of factors that I think could push gold up through the old high, which was 2060 or whatever. How much higher it goes will really depend on the buying interest that develops in the market, and that's something that's really hard to sort of assess. But what we have seen in this market already is, even over the last 12 months, the gold ETFs have actually seen inflows, but the stocks really haven't reflected that. And I think that's a function of the average generalist who's decided he wants a bit of exposure to gold. He's buying the GLD or he's buying an ETF, and that forces him to buy bullion. And so the inflows have been generally up. And there has been some pullback recently in the last couple of months, but generally the inflows have been up. So as those inventories build, that's supportive for the gold price. If you get people nervous about inflation, that's going to be bullish for the gold price. If you get the US dollar rolling over, the dollar is looking pretty toppy, that would be bullish for the gold price. So I think there's a number of factors that could push gold higher. But at the end of the day, it's like Bitcoin. Nobody ever thought it would go to $50,000. Why did it go there? Because there were more buyers than sellers. And if we get that phenomena, which we saw from 2000 to 2011, the gold price went from, call it 300 to 1923, and stocks got way ahead of themselves a number of times within that cycle. And really, what killed that rally was the inflation and the cost pressures. And the margins were not going up anymore because of the cost inflation. So gold rolled over, and I think in this cycle, we've seen a pretty good rally from, it wasn't not that long ago that gold was sub 1,500, sub 1,400, and got to 2,000. It's now in the 1,850 range. And, I kind of feel like in the next 5 years, we should be able to get gold up, north of, I'm going to say 2,200, but it really depends on how much investor interest there is and how many guys are out there buying it, because gold can go a lot higher than you think, much as Bitcoin did, much as the overall market did. And I think when you're in the bubble like we are, gold goes up $150 or $200, and we think it's the end of it all. But I think that's probably far from the truth. I think it's really going to depend on how much buying there is out there. And there's a lot of generalist investors that aren't in the market, and there are very few ways to play the gold price. There's only, the market cap of the entire sector is tiny. And if you get even 5% of the assets out there chasing our space, the stocks are going to be on fire for sure. And I think, gold's got the biggest number of companies in the sector. If you look at silver, there's a much smaller number of players out there. Silver market could be very explosive, but even nickel and even copper, those kinds of commodities, I think you could really see the stocks really do well if you get some movement higher in the commodity prices, because there just are very few ways to play those commodities.
Great, and one more question. So if I'm an investor, generalist or otherwise, what am I really looking for at this point?
Well, I think I think everybody's kind of looking at the producers. You want somebody with reasonable cash costs, decent margins, and I think we're seeing that in the space now. All the producers are really making pretty good money. If you talk to any of the CFOs of any of the mining companies, I think they're pretty happy with the gold price. You know, their all-in costs are in the $1,000 range, some are less. I mean, I cover Lundin Gold. Their all-in sustaining costs are sub $700 an ounce. So at $1,800 an ounce, they're making oodles of free cash flow. Nobody really cares that much, but so the valuation isn't that excessive on that stock. But I think you're looking for, you know, initially good margins, good operating team. It's always important. Obviously, you would like to be in a stable jurisdiction. That's often more difficult, but we're pretty fortunate in Canada that Quebec and Ontario and British Columbia are reasonably decent places to work. Quebec's probably the best, I guess, from my perspective, but certainly Ontario is good as well. And you want to have a stable jurisdiction, a stable government behind you, because you don't really want to have much in terms of fiscal changes on a go-forward basis. It makes it difficult to get people focused on your operations or your company. But you know, a lot of the big ore bodies now are not in Quebec or Canada or Nevada. I mean, Nevada's been pretty well explored. So you know, you are forced to kind of look further afield, and you know, there's some countries that are difficult. I don't think anybody's that interested in investing in gold mines in China or Russia, to be quite honest. But there were times in the past when Russia was pretty popular. I mean, Kinross was a good example of that. They had a number of operations in Russia, and they made a lot of money there. They certainly got a good return on their investment, but at the end of the day, they bailed, they sold. So I think you want, you know, good margins. You'd like a decent mine life, but you know, the simple fact of it is it's difficult to have much more than a, you know, 7-8 year mine life at an underground gold mine. So you know, I think a lot of these operations generally replace reserves every year, and I think that's something to keep an eye on. Just watch their reserve replacement. As long as they're replacing what they mined every year in an underground operation, I think, particularly in Canada, a lot of these mines are going to go for decades, even though they might only have a 5 to 7 year reserve life, but they continue to replace their depletion every year. And then management is key, obviously.
Okay, Kerry, I think we're going to wrap it up. Thank you so much for riffing with us this morning.
No problem.
I think we did a pretty good job, and we'll try to find Monsieur Parent-Bouchard later on.
Okay, thank you, Joanne. Thanks, everybody.
Thank you.
We'll see you again.
Thanks again.